Dividend investing is stupid. This is a phrase I've heard being thrown around quite a few times, and it's a line of thinking I don't necessarily subscribe to. Welcome back to my channel, The Incipient Investor, and in today's video, I'm going to break down to you some misconceptions people have of dividends, which may give others a wrong impression. Why people believe dividends are not beneficial, and perhaps even detrimental to a portfolio, and then moving on to why and when dividends are actually great. To start off, let's talk about some misconceptions people make when talking about dividends. A lot of misguided dividend investors believe that dividends are quote-unquote free money. No, dividends are not free money, okay? The company is simply distributing cash to shareholders from the company's own coffers, so opportunity cost is incurred, where the company relinquishes the option to use that very same cash to generate higher returns to investors or cushion shocks to their balance sheet. So do take note of that the next time someone wrongfully assumes that dividends are free money. Another misconception when it comes to dividends is the existence of the dividend capture strategy. So quite a decent chunk of investors, or at least traders, mistakenly think that they are able to quote-unquote capture a dividend by purchasing a stock just before its ex-dividend date, becoming entitled to the dividend, and then subsequently selling the share off. There's a problem with this strategy though. The market is not stupid. There's no such thing as a free lunch in this world, and the same goes for investing. So once the ex-dividend date arrives, the shares of the company would typically drop the corresponding amount of the dividend. But then some people hear this and retort with the fact that they've had stocks drop substantially less than the dividend. Hence, they have made quote-unquote free profit. Okay, this is an erroneous conclusion to make, that supposed profit is only the result of undertaking market risk. Stock price movements are a result of a confluence of factors and can be attributed to things such as simply daily market fluctuations and news events. So now that I've cleared up some dividend misconceptions, I'd like to subsequently focus on some arguments made by opponents of dividends and try to counter them. So the first argument is that dividends are tax inefficient. Companies usually have a fixed dividend schedule, which results in a dividend payment occurring multiple times per year, which is indeed a taxable event depending on the country you reside in. The reason why people purport that this is detrimental to investment returns is the fact that in most places, such as the US, dividends are typically taxed at a higher rate than capital gains, which leads to an increased erosion in investment performance. To be very honest, I won't really try to counter this argument because I believe it's valid. However, as with all things, we cannot see the world in black and white. There are always nuances, so dividends do have their place, especially in places such as Singapore. Singapore has 0% dividend taxes and 0% capital gains taxes, which may lead you to think that selling shares and collecting dividends is virtually the same, which is a perfect segue to my next point. So another argument detractors of dividends put forth is the fact that selling your own shares is virtually the same as receiving dividends, with the exception of having the added benefit of flexibility. So hark back to my earlier statement regarding dividends being paid out of companies' own coffers. In a sense, you're paying your own self. So if you compare this company hereby known as A versus an identical company B that retained its earnings, you'll notice that if you sell company B shares of an equivalent amount to the dividend issued by company A, you will own a smaller percentage of the company. However, company B is worth more as a whole. You will essentially be having smaller slices of a larger pie. Hence, one can conclude that selling shares is the same as receiving a dividend payment. Not. You see, the aforementioned scenario lies on a certain key assumption that we've made, one of which being that the market is perfect. This assumption obviously does not hold water, as if that was the case, then there will be no opportunities in the market whatsoever. Whatever's on the market will be perfectly priced in. You see, undervalued companies may remain undervalued throughout our entire lifetimes, or even forever. Being paid in dividends removes a certain degree of market risk, as regardless of the market sentiment, dividends are more or less unaffected. You are taking back a certain degree of control over your returns back from the market, which is not the case if you sell your shares directly. So I'd like for you to take some time to process and consider my counter arguments, so do let me know whether you agree or disagree down in the comments below. But we'll now transition to what are some of the key benefits of dividends. So for the first one, Dividends give shareholders more control over their money. So now what do I mean by this? Okay, so take our earlier example of company A and company B. Now let me ask you this. When investing, will you want your money to work for you? I'll presume the answer is yes. Now since the two companies are identical, if you compare their PE ratio or almost any per share ratio in fact, company A will appear cheaper. And that's because your money is buying a higher proportion of utilized assets as opposed to simply buying cash locked in a company, requiring layers and layers of management for its value to be realized. In addition, in reality, the cash held by most companies is actually priced at a discounted rate by the market. Now you may ask, why? So this is due to the fact that it's very easy for management to squander away these assets. Management may employ that cash in a way such that it is value destructive if ROIC is below WACC. This is why dividends are typically an indicator of how aligned is management with shareholders' interests, because value is being realized for shareholders. So there are a lot of cases when management so-called reinvests earnings in a half-hearted way so as to justify higher salaries and bonuses. So it's really a case-by-case basis for every stock. Yet another benefit is that companies which pay dividends are mature, stable companies. I understand this may sound boring and, to each their own, but you cannot deny that the stability associated with mature dividend companies is a plus point, with dividend companies historically outperforming the broad index. Being able to pay substantial dividends is proof that company is able to generate cash and you cannot fake payments being deposited into your own bank account. So in a way, it protects against general fraud since accounting numbers can sometimes be prone to manipulation. So let me ask you this. Would Enron have been able to pay great increasing dividends to its shareholders? I'll leave you to make your own conclusions, but all I'll say is that despite the company's supposed great increase in profits during their accounting period, it didn't increase its dividends in tandem. Lastly, dividends help in a psychological way, allowing you to remain steadfast in the midst of uncertainty and market downturns, being rest assured that you are still receiving income no matter what is the market's perception, preventing you from making any rash decisions as opposed to quote-unquote making your own dividends, which may subject you to the pitfalls of emotional investing. With this, I've come to the end of my video. I hope that you're able to take away some useful insights with regards to dividend investing. So I just want to emphasize that this is my sole opinion, and I believe that there are many different ways of investing suited for every individual and scenario. I'm simply disputing the fact that dividends have no merit or place in the investing world. So do let me know your thoughts in the comments down below, and if you enjoy content like this, I would greatly appreciate it if you subscribed. With that, have a nice day and see you around.